Good afternoon, everybody, and welcome to Thursday's edition of your Daily Market Insight video here on December 16th. This is Hunter Mozingo coming to you at about 4:11 p.m. Eastern Time here in Jacksonville, Florida. And today we've got some nasty reversals on the indices after a really bullish close yesterday and even some bullish activity after hours as well. We're going to talk about that. And then we've got continued carnage in growth stocks after a little bit of relief, you could say, maybe yesterday. Today, not so much. We're going to look at some of the decimation out there. But first, let's talk about what just happened, right? Indices reversed, big tech hammered. We've been seeing big tech hold up pretty well, particularly Apple. Not the case today, and that was really, really felt by the indices, particularly the Qs there, the S&P down about 1%. But the big tech names, the Teslas, the Microsofts, Googles, Apples, taking it on the chin today, and that's kind of trickling down, making it hurt a little bit worse on the indices anyway. So we're going to look at all of that good stuff. But first, let's talk about performance. And we got the G5 leading the way down. I mentioned continued carnage in growth stocks down nearly 3%. We're going to look at those charts because I think there's something very imperative with the recent lows you want to pay attention to. S&P down about a percent or so, was right at all-time highs roughly early this morning, ended up finishing weak. Qs, the weakest of the major five, was down 3% at one point, finished the day down around 2.5%. Dow, the steadiest of the group, was actually green up until the last couple of minutes. But the Dow, more or less flat for the day, pretty steady, consistent. Mid caps down 1.3, Russell 2000 down 2. So the weakness in tech kind of continues as far as the Qs recently have been struggling. The Dow, the more fear or defensive areas have done better. So that brings me to market state, which is still in an uptrend because we had a follow-through day yesterday. However, it appears we got some distribution today on the S&P and the Qs. However, I don't think the actual S&P 500 and NASDAQ index themselves were above average volume. Nonetheless, the action today was brutal in market leaders. It was brutal on the indices, some really wide ranges, especially following the action to close out the market yesterday. So that brings me to the trend gauge. And I mentioned we've got continued carnage in growth stocks. We've got big tech getting hit today. Market leaders is very close to going towards bearish. We've got that red small yellow or small red arrow here on the bearish, and that is because we saw a lot of bad action in leading stocks today. Stuff that was holding up or getting back above the 21, starting to kind of firm up or look okay. Just some brutal action today. So market leaders on the cusp of going to bearish. We also had to move short term from up to neutral because we saw the Qs really slice through the 21 EMA hard, stay below it. We've got the mid caps and the small caps still below the 21, but the Dow and the S&P are still above it. So if the Dow and the S&P end up cracking the 21, closing below it, you'll see short term probably go to bearish pretty quickly as well. Midterm, QQQ closed right on the 50, S&P and the Dow still above. Mid caps and small caps are really the main reason for that small yellow arrow here in the middle. And then long term, that's primarily because of small caps. So small caps still struggling to get back above all the moving averages. So a couple of changes there to the trend gauge. Like I said, some bad action had to downgrade leaders. Short term outlook has gotten downgraded as the Qs slice through the 21. So let's get into the charts. But before we do, let me reference Revere. If you have any questions about any of the stocks I cover today or sectors or anything I say, key level on the Qs or the S&P, whatever it is, just send me an email. I'll happily respond. If you're interested in what we do as a company, what our investment approach is, you can email me. You can email Dan, Tim, Alex, Merrill, or Don at revereasset.com as well. So let's get into it here. Let's start. And sorry, I've got Rivian up because they reported today. I was just trying to check out what they might do after hours. But let's start with the S&P here. So the after hours high, I believe, is above this 473.54. You don't see it on this chart because it doesn't reflect after hours trading. But last night we were up almost 1% on the Qs and the S&P in the after hours trading to early this morning. Obviously, we pulled back well off of that. And then as the day progressed, you can see we traded all the way up to 473 almost on SPY here and ended up finishing very poorly, coming back all the way to the 21, giving back a lot of the move we saw yesterday. So a really tough reaction action from the S&P from 473 all the way down to the low of the day being near 465. So a pretty significant move on an ATR basis as well. That's about 2 times the normal range for the S&P. And so the positive, we held at that 465 level, which is also the 21. So although it feels really bad, particularly in some areas of the market, the S&P is still above the 21 and the 50 is catching up pretty rapidly, now almost at that 460 level, currently at 459. The Qs, let me get that out of there. Sorry about that. The Qs, not as good, as you can see, did not respect the 21, did not stay above it. The Q's high after hours, I believe, right around 401. So it actually cleared this little area of consolidation here, which would have been super bullish had it held. Problem is, it didn't. It opened and pretty much weakness persisted from the get-go. Not much of a bid coming in throughout the day, and we did see a small bounce, however, towards the latter part of the day from about the 385 low, as you can see there on the Qs. But once again, the positive, we are above the 50 on the Qs, and we are above these 2 lows. That's the key area I'm watching. This 384 level is very, very important. If we get back above the 50, back above the 21, maybe things can shore up a little bit. But if the Qs end up taking out this 384 level, that's something I want to pay attention to. Real quickly here, we're going to run through the rest of these indices. DIA, I mentioned the steadiest, really acting well as all these moving averages converge. That this 355 area is the cluster where all those moving averages are. They're actually starting to move upward a little bit too. So DIA continues to be steady and safe for the time being. That seems to be the way it's being used. It's less volatile than the Qs and the S&P, holding up a lot better. IWM, not really able to keep anything going. The only thing saving IWM is staying above these lows. IWM takes out that 211 low, could be cause for concern or further decline. So I keep a very close eye on that. IWM below this 211 low, or conversely back above 220, I think would be a positive for IWM. A big, important level for IWM there, 220. MDY, back below all the major moving averages except the 200-day, rejected at the overhead 21 today. I'd like to see this at least get back above 500, possibly back above today's highs or yesterday's highs as well. So a lot of the same kind of looking candles today, right? It looked good initially, ended up fading and finishing very poorly. I think tomorrow is going to be imperative, not only for the indices, but a lot of individual stocks as to what happens, because you can see here we're very close to slicing back through that 200-day on the mid caps. The Qs are right on the 50, so we're kind of at a pivotal spot going into tomorrow and the end of the year here. So let's go through some of the positive stuff here first, and let's look at some of the stuff that it was actually green today that looked good, because there really, to be quite frank with you, was not very much of it. XLF financials ETF here, getting back up into right on the 50-day. So just, I know this is not the most splendid looking chart. I don't think it's a bad one, but not the greatest. But the point is, it was green with volume on a day where the markets were really having a tough time. I want to highlight that. I want to bring that to you guys. So trying to get back above the 50-day moving average there on the financials sector ETF. You also had gold miners and silver miners making a strong move up today. Granted, these have been beat up really bad, but you can't ignore the price and the volume. GDX, SIL, and just the regular gold and silver ETFs were setting off upside alerts after some pretty extreme selling recently. So gold and silver showing some strength today. Consumer staples, right? This is your Procter and Gamble, your toothpaste and food companies, the companies that are your staples, right? This ETF has gotten incredibly extended on this big breakout here. You can see the RS line just going straight up really the last week or two. And maybe the big name everybody knows, Procter and Gamble. Look at the breakout on this thing. Very, very extended for Procter and Gamble, but I think that's a sign of the times when you've got XLP, a very defensive sector, this extended to the upside, and Procter and Gamble, maybe the most commonly known defensive stock, same thing, that extended to the upside. There's certainly some fear going on right now, rotation out of the risk on and into the risk off, as you see here with XLP and Procter and Gamble. Same thing with XLV. We've seen UNH get extended to the upside as well, along with the healthcare ETF. We've seen NEE go on a great run, Nextera Energy, and utilities continue to grind higher. So the defensive areas strong today, although the market was weak. So you want to make sure you're aware of that. That's usually not a great thing to see these be some of the strongest sectors of the day, and they have been for a while now. Utilities, healthcare, and staples continue to be strong. But like I said, staples very, very extended no matter what time frame you look at the chart, weekly, monthly, daily, doesn't matter. So I would keep that in the back of your mind. XME, which got decimated yesterday, only to come back. Nucor was down 13% at one point. These stocks were actually green today and came back and finished well. Some other names that are in areas that are holding up is the CF, MOS, NTR group, this chemical agriculture group. This has done really well compared to the market, at least recently. I know they closed at the bottom of the range, but so did pretty much everything else. This group has held up pretty well and showed some RS. So let's get into the bad, and there's plenty of it. So we actually got stopped out on AMBA today. This was a new buy, just an insane, ugly downside candle. We got an initial bounce off the 21, and really from that initial 15, 20 minutes, things vastly accelerated to the downside. So AMBA closing below the 50. Just nasty, nasty action here in a lot of the higher beta names, as you'll see when we go through here. Affirm, a fintech favorite, was down to nearly 90 at one point, down 20% almost at one point, finished the day down around 11%. Upstart, another fintech favorite that's now a loser, down roughly 10% today. So you see the continued decimation here. Snow, one of the ones that had been one of the better holding up names out there as far as growth world goes. Like if you took this candle off here, that's actually a decent looking close. Had some news come out after hours and ended up just trading awful, down 13, 14% at one point, filled a gap. Just some really, really brutal, sharp action in a lot of growth stocks. NVIDIA and AMD, some of the big liquid leaders, also with some crazy wide ranges today. You can see here NVIDIA from roughly 310 all the way back down to 280, down 7% for the day. AMD from 147, 148 all the way down to roughly 136, 135. So some of these big liquid leaders also getting really wide and loose and trading all over the place. Now, it is important to keep in mind we had a Fed event and we have OPEX going into tomorrow. So that could just be a byproduct of that. But some nasty action from the liquid leaders nonetheless. Enphase, a former solar leader, not able to really have any type of positive traction, continuing lower. Some more here for you. Tesla, really, really ugly action, rejected pretty much at 1,000 all the way down to 920, closed at the very bottom of the range. AAPL, Apple down 3, almost 4% here, breaking the 8-day for the first time in a while, closing below it. You've also got Microsoft down 3% today. So these big tech names that had lifted up these indices and really held up very well for the most part, starting to crack a little bit. So that's something you want to pay attention to. Also, FTNT had a great reaction yesterday, nasty reaction today. It's just the theme that we saw. And lastly, we got stopped out on the majority of ANET and QCOM too. These are two of the strongest looking charts in the market. However, not immune to the nasty reversal we saw today. So not stopped out entirely, still have a small position on these, but just really ugly action around the across the board. So two more that actually look good today. I forgot to cover these. I meant to. Ford actually still has a decent looking chart, closed at the bottom of the range like most everything else. And then you got Berkshire Hathaway breaking out today. So really a sign of the times when the best charts I've got to bring you are Procter & Gamble and Berkshire Hathaway and Nextera Energy is some of the most positive looking stuff we got going on. But that is what it is. So I hope you enjoyed today's video. I will see you all on the podcast this weekend, and I'll see you on next Monday's video. So have a great weekend, everyone. Thank you.